guess who's winning? It's you as the consumer. So guess why this stuff's not taught by the big banks and financial institutions and in schools and government organizations. They're not teaching this because they're not winning in it. We're the ones winning. So we're the ones teaching it, right? So all we can do is say, okay, where are we today? And how can we be as smart as possible to take advantage of what we have today? And once you actually implement and experience in your own life, what's going to happen from there? You're going to want to do more of it, being smarter with that same dollar. Hey, welcome to Wealth Webinar Wednesdays. My name's Stephen Nagy, business partners with Chris Naugle, and I will be hosting the show for you today. Today, we're going to be talking all about the infinite banking concept and what it means to become your own bank, how to become the bank, how to become your own banker, and exactly what that looks like here in 2024. Not only what it looks like, but why we do it and how it can be relevant for you and your family. Now, I want to make this very interactive, so we are going to be talking through the chat box. Throw your questions in the Q&A box. I'm going to hit those as we go so we can make sure that everybody understands every aspect of this and exactly what it is that we are doing. Now, when it comes to the infinite banking concept and becoming your own bank, this is a strategy, a financial strategy that's been used for over 200 years. So this is nothing new that we have created, but this is something that we have ourselves now used for several years and have taken our experience and some of what we're good at, and we've incorporated that into the infinite banking concept that's been around for 200 years. So we've taken the foundation. There's a gentleman by the name of R. Nelson Nash. And if you're not familiar with Nelson Nash, write that down right now. By the way, guys, I'm going to tell you to write a lot of stuff down to give you homework to go do after this webinar. So make sure you have a notepad open or you have a notebook with you, because you're going to tell you a lot of things to write down to do later on. So number one, write down the name Nelson Nash. Now, Nelson Nash, unfortunately, we lost him a few years back. He passed away, but he's the one who really brought what we now call the infinite banking concept to the mainstream, to the masses. And he wrote several books over the years. I'll give you the name of two books that I would highly recommend just to start with. So one of those is called Becoming Your Own Banker. All right. And you can see it right here. It's called Becoming Your Own Banker. This is by R. Nelson Nash. So that is one I would highly recommend. Number two is another book written by some of his business partners, Carlos, and a couple other gentlemen that you're going to be meeting on some of our webinars that we have coming up, because we have been doing a lot of work with the Nelson Nash Institute. So the book is how privatized banking really works. So Becoming Your Own Banker and How Privatized Banking Really Works. Write down those two books right there. And Nelson Nash, really created what we now use and what we do with the infinite banking concept. And then what we've been able to do is add to that and really say, okay, in 2024, what has changed since the 80s and the 90s and the 2000s? Not only in the markets and what goes on in the economy, but what's changed with the insurance companies? What's changed with some of the different laws out there? And we've been able to really take that foundation and turn it into what we now have today of the infinite banking concept, the BYOB money multiplier. And that's what we're going to be talking about right now, how you can start applying this stuff to yourselves in your life. But before we get there, let's talk about why you want to become your own banker. All right. And to get into that discussion, I want to take even a further step back and start kind of at the beginning for myself. And, while I'm talking here right now, if you have already started on your journey of becoming your own bank, if you're already in you have a banking system in place that you're using, I would love if you could just put in the chat box in a couple sentences, a short paragraph, what did your journey look like? Like, what led you to becoming your own bank? What led you to picking up that phone and getting on the phone and starting your first policy? What did that look like for you? And what did you use it for? Because when we talk about becoming your own bank, why you want to do it, what I found, it really provides a better way of doing things for three different primary situations. Now, it's the infinite banking concept because there's an infinite way you can use this system. But I've really found with my experience helping now thousands of different clients across the United States over the last 5 years start their own policy, I really found it boils down to three different primary ways that people use these. So number one, especially when you're getting started new to this. So number one, paying off debt. So how many of you right now have some debt? I know that a lot of you on this call do because data shows me that. If I look at from just even since 2020, when the pandemic hit, during the pandemic, across the board in the United States of America, in the pandemic, people's savings actually went up and people's credit card usage and debt went down a little bit, but savings went up. And a lot of that was due to the fact that people just were not able to go out and spend money. Things were closed down. We were, safe distancing and all the rest of it. And people just weren't spending a lot of money. And so people's savings were able to go up. People weren't putting things on credit cards. But then what happened when things started to open back up? Chris always called it the summer of revenge, or the revenge summer, where everybody was like, hey, everything's open back up now. Everything looks great. Let's get back out there and really enjoy life again. And ever since then, over the last couple of years now, what we've seen in the economy is savings rates are now dropping like a rock, and credit card usage, credit card debt has skyrocketed. It just eclipsed $1 trillion for the first time in history. And now we're starting to see credit card delinquencies start to really ramp up a little bit. And guess what happens to those savings rates that increased in 2020? Yeah, you guessed it. Those savings rates are now falling off a cliff and going back down to essentially zero. For a lot of people, we always tell people, hey, you should be saving at least 10% of your income on your gross income on an annual basis. So if I was to ask everybody on this call right now, how many of you are right now saving at least 10% of your gross income on an annual basis? Just put yes or no in the chat box. I'm just curious. Right now in 2024, and what we found is a lot of people are not doing that. That's what the data tells us. And so debt is starting to accumulate right now, and people are finding themselves in some financial situations where they don't really know what to do. And so one of the primary reasons people become their own bank and get started creating a banking system here is because they have that debt and they want to be able to get out of that debt in a smarter way. Okay. Very popular out there, things like debt consolidation programs. Cool. If you have a bunch of high credit card or high interest credit card debts, and you can consolidate that into a smaller, or into one lower interest consolidation loan, maybe that makes sense. But what are we doing with that? All we're doing with that is we're simply transferring that debt that's owed somewhere else. That debt is still owed, we're paying it off. But what happens there? The rate of interest never changes. All that interest is still bleeding out of our financial lives. We're still giving it to somebody else. So somebody else is still making money off of all of our debt. So number one, what I'd like to show you here today, one of three different things we're going to talk about, is how you can get started with your own banking system right now. You're not going to work any harder. You're not going to work any longer. You're not going to take on any more risk. We're going to change one thing, where the money goes first. And by changing that one thing and starting this banking system, now we can use this to start paying off that debt. And what it's going to allow us to do is multiple things at once. And at the end of the day, that's what we're trying to do, is we're trying to be as smart as we can with what we already have. So the infinite banking concept is not about taking on a second job. It's not about taking on more risk so your money can make more money to be able to do better for you financially. It's not about pushing things off. It's about changing one thing, and that's where that money goes first. Yeah, the velocity of money, Robert, exactly. The velocity of banking. And so by making that one change where our money goes first, now we're able to do something. Now we're able to utilize that same dollar in more ways and do it a lot more smart. I think President Trump is the one who calls things like, you always hear people make fun of him saying, oh, that is very bigly. And, like he always says these words. Well, I'll say it's smartly, right? It's using that same dollar smartly, more smarter. Whatever the word would be there, but essentially that's it. So I'll show you that here in just a moment, how we're going to use this to pay off debt, a lot faster than otherwise possible. And I know a lot of people are in that situation right now. Now, if you're on here right now and you're like, hey, I don't have any debt. You know, I'm very fortunate to be in a position where financially I'm able to pay off my credit cards each month. You know, maybe I have a mortgage. We can talk about that, whether it's smart to use this to pay off a mortgage or not. But if you have a mortgage, maybe you also have some equity built up in that property where we can tap into something like an all-in-one mortgage or a HELOC, a second lien HELOC, or a first lien all-in-one mortgage, something like that, where now we can tap into that equity. So that's a whole nother situation. But then again, that's using those same dollars to be more smart, right? Because if we have financially been able to purchase a home and we leverage our down payment with a mortgage to be able to purchase a property. Okay, so I'm just explain what that means. Let's say in 2019, you bought a home for $300,000. And to buy that home for $300,000, all you had to do was come up with 10%, $30,000. So you were able to go to a bank, give them $30,000 essentially, and they gave you $270,000 to go purchase that home. So now you own an asset that's worth $300,000 with only $30,000 of your own cash. Does that make sense? That's basically what a mortgage is. And that's one of the reasons I love real estate, is it allows us to do things like leverage our money to obtain assets that are worth a lot more. That's all leveraging really means. And as an investor, do we do that all the time? Absolutely. Investors are always leveraging money to be able to make more money. And that's a lot of what real estate investing is about. But nonetheless, let me get back to this. So if you're somebody that, you know, has purchased a home in 2019 for 300 grand, well, what is that house worth today, would you say? Is that house worth 500,000, 600,000? It's probably worth a lot more than $300,000 today, right? 5 years later. Why? Because over the last 5 years, 4 years, we've seen one of the largest increases in real estate prices since what happened in 2007 and 2008. Before that, it was many, many, many years before we saw anything like this occur. And so yes, equity in that home. So now that property you bought for 30,000 of your own dollars, you have a mortgage payment of 300 grand, but that property is now worth $600,000. What does that mean? Well, that means you have $300,000 or more worth of equity in that property. So we can tap into that equity and get access to that money. So now we can have that money to use for other things, to start a business, to invest, to make a spread. You know, if I borrow the money in a HELOC at 8%, and then I lend it to somebody and I make 15%, what am I doing right there? I'm making a 7% spread. But it's still that same $30,000 initially that we used to obtain that mortgage to buy that property that went up in value, that gave us the equity to go out there and obtain that HELOC to be able to now make that spread. So we're using that same $30,000 over and over and over in that example. Does that make sense? I'm just kind of throwing out some different ways of looking at how we can use the same dollar more smartly. Is smartly a word? Is anybody smarter than me? Anyways, okay. My wife is a teacher, and I just heard her yell from the other room. That's not a word, so I'm going to go with it. All right. So with that being said, that's basically what leverage is. That's what. So we're using the same dollar. Now, if you're in that position where you've done well financially, you don't have anything but maybe a mortgage, maybe some other kind of low interest loan, you know, we can talk about and run the math on that, whether it's smart to pay that off with the infinite banking concept or not. That's more of a kind of a one-on-one situation and what we can, and strategy we can talk about. But if you're in that situation, okay, well, is this concept still right for you? Absolutely. And I'm going to show you a couple other examples here today, how we can use this for major purchases, how we can be smart about doing things like buying cars. Okay, so instead of going out there and financing a vehicle, how can we use our banking system to buy that vehicle? And why would we want to do that over going to the bank to borrow the money and doing it, or just using cash? You know, if you're financially secure, you have cash sitting there to go out there and buy a $100,000 car. What is more smart, to do that or to use this banking system to purchase that car? So I'll show you what that looks like. And then if you're just like, okay, listen, I'm trying to grow wealth right now. Like, I'm trying to put my family in a better financial position. I'm trying to build for retirement. I'm trying to create a legacy. I'm trying to create generational wealth. So if you're at the point right now where you're accumulating and growing wealth, well, this is really going to blow your mind what this concept will allow you to do, because it's going to allow you to warehouse your wealth in what I believe is the safest place to do so in the world. It's going to allow you to take every dollar that you have and have those dollars compound, uninterrupted, guaranteed, tax-free for the rest of your life. It's going to have that protected money that's always guaranteed available to you to go out there and use it when an opportunity arises. When you're ready to grow your wealth, it's going to allow you to do all of that. And it's protected, and it's set up in a way where when you do pass away someday, when you graduate, as we say, all of that money and a lot more is going to go tax-free to your family, to the people important to you in your life, to your beneficiaries. It does all of that and more for you. So I'm going to show you how we do this. And the reason why I asked a minute ago, if you're already growing a banking system, you already are using the infinite banking concept in your life, what does that journey look like for you? Because what I've seen now over the years is so many of our clients come to us and they're like, hey, I have debt to pay off. We create a debt plan for them. We now call it a debt blaster. We create the plan for you. We're right there holding your hand along the way while you're following that plan and revising it with you. And then at the end of the road, what happens? Well, that debt is now gone. And then what happens? Well, those clients come to us and say, okay, well, what next? What do I do now? The debt's gone. I came to you with the goal of paying off the debt. Well, now that debt is gone. Now, what do we do? And that's why I love to see these stories, and why I'm always asking you guys at clients at events on these webinars, what has that journey look like for you? Because I see it happen over and over again. And guess what? The people that are doing this are just like you and me. We're just everyday people out there working hard, trying to do the best we can for our families, and we want to be smart about it. And that's the beautiful thing about the infinite banking concept, is it allows us to do all that again. I'll say it one more time, without working any harder, without working any longer, without taking on any more risk, and building this foundation for our families. And that is completely the opposite of what the traditional financial mindset is for people in this country. And I know that firsthand. And I'm sure a lot of on the business side, I know that firsthand, but just out there being a regular person. I mean, how many of you on here right now have, or in the past have had, a 401k? I'll just give you a quick example. Does anyone on here now or in the past at some point you have personally have owned and invested and put money into a 401k plan? And if I had to guess, it's probably 95% or more of you have at some point had a 401k. All right. So if you have so let's talk about 401ks for just a minute, because it boils down to, again, the mindset shift, looking at money and looking at investing a little bit differently. And so why is it that 95%? I saw everyone in the chat box except one person just now say that they had a 401k in their lifetime. So why did everyone start a 401k? Well, tell me, I don't know, in the chat box. Why did you start a 401k when you started it? Everyone that just said, yes, you've had one. Why did you put money in a 401k? And for me, what I've seen, it's because it's what you were told to do. It's what you go to a job, you sit there your first day in the HR department, or you meet with the HR manager and they talk to you about all your benefits, your health insurance, your paid time off, your sick time, your vacation time, and your retirement benefits, your 401k. And they say, this is one of the benefits of working with us. You can take some of the money that you earn typically before you pay taxes on it, and you could put it into this 401k account, and that money will grow for retirement for you. But what in reality happens when you put money into 401k? Think about that. And I'm going to read these questions real quick. I'll read a couple of these responses real fast. Tess said, because everyone said I needed it, so it would supplement Social Security. Okay. I told I would need to use it for retirement. James said employer matching. Okay. So employer matching means a lot of companies will say, you can put up to 6% of your salary into the 401k and we'll match up to that 6%. So if you make 100 grand a year, you put $6,000 a year into a 401k, the employer will put an additional additional $6,000 into that 401k also. Now, in my opinion, a high match like that you're vetted in immediately or pretty quickly is one of the only reasons, in my opinion, that a 401k can make sense. Now, not always. It's going to depend on how much you can put in, how much you're making, what your options are with the 401k, your age, and what your goals are. But at the end of the day, if they're matching it, that's really one of the only real advantages I see. Because with a 401k, what are some of the things that happens as soon as you put money into it? Well, as soon as you put money into it, what are you doing? You're giving up control. Because when I put money into a 401k, am I allowed to use that money to invest in a piece of rental real estate across the road here? No. Am I able to buy precious metals? No. Am I able to invest in a business, a private business? No. Am I able to invest in individual stocks? No. Most 401ks allow you to invest in specific funds that they have set up. They call them lifestyle funds usually, or they have different names for them. And sometimes it'll be like a conservative fund, a mid fund, a more risky fund. And a lot of times it has to do with the balance of stocks versus bonds and treasuries and which, in different indexes. A lot of funds these days are just tied to the indexes. So one will mimic the S&P, one will mimic the Dow, whatever the case is. But basically, yes, you can pick which fund you want to be in and what your risk tolerance is, but you're not able to really control what that money is invested in. And then on top of that, if you want to use that money for something else, let's say you want to use that money to go start a business or your child's education or buy a house or, invest in something private. Well, you have to pull the money out of the 401k. Well, when you do that, what happens? They tax you and they penalize you. So they penalize you 10%. Plus, you got to pay taxes to get the money out of there. So they penalize you to use and access your own money. Now you can do a 401k loan, but then it takes the money out of there and it kind of defeats the purpose and all that. So again, can a 401k make sense? Maybe. Just know what you're really getting into and make sure you're getting into it for the right reasons. And more importantly than that, it's just the mindset, the fact that everybody does it because it's what's always been done. Well, what if infinite banking was something that had always been done and everybody else did it? So as soon as you started earning income in your life, you started what? You started an infinite banking policy. Imagine what that would look like. And if we have time, I'll show you some of these juvenile policies that we do for minors, for example. And not only are these, I'll just talk about my personal one for right now. So I started a policy for my son, Bryce, who's 8 years old now, when he was 5 years old, turning 6. Is when I started it for him. Now, will that be a solid financial strategy for him to pay for college, to pay for his first car, to pay for things like that as he's growing up? Absolutely. But more importantly, why do you think I started that policy for him? Because I already at 8 years old talked to my son about money, about financial education and strategies. You could talk with him and I'll bring him. Anybody that's coming to one of our experiences or one of our events, I'll bring him to one of the events soon. I would challenge you to go chat with my son who's 8 years old and ask him if he understands how banks work, if he understands how loans work, if he understands how real estate investing works. And he will tell you some of the basics about this stuff because we have these conversations and they're really interesting. And so as he gets older, I'm going to show him when he wants to buy a vehicle, for example. Well, before that, we're going to buy a jet ski when he's 14 years old and he's old enough to legally drive it. He's going to buy a jet ski. So how do you think we're going to buy that jet ski? We're going to buy it with his banking policy. Why? Well, A, because the policy will end up recouping all the money for that purchase anyways, which I'll show you in a second here. So the jet ski will end up basically being paid for using the system the right way. But more importantly, it's to teach him how 98% of his friends that are going out and buying jet skis are doing what? They're going to a bank like Wells Fargo or Chase or something similar, and they're getting a loan to buy that ski. or they're using cash and losing the purchasing power of that money, the investment power of that money. And then by contrast, I'll show him to use his banking system to buy that jet ski and all the advantages of it. So again, it's not only smart financially, but it's smart with mindset and the education factor of it. So it's really cool to see how this works with young people. So what if America, instead of going out and starting all these 401ks, what if they starting these banking systems? Well, guess what? Guess who wins when you start a banking policy? It's not the banks. It's not the government through delaying taxes and penalties and everything else they do with these IRAs and 401ks and retirement accounts. Guess who's winning? It's you as the consumer. So guess why this stuff's not taught by the big banks and financial institutions and schools and government organizations and things of that nature. They're not teaching this because they're not winning in it. We're the ones winning. So we're the ones teaching it, right? And so we need to share this stuff with each other. And that's why I love the child's policies, because it's smart financially, but more importantly, it's smart mentally, okay? And so I encourage people all the time, share this with your friends, share this with your family. But it is a big mindset shift. So when you share this with your friends and your family and they tell you you're crazy, or they ignore it and they never watch the 90-minute video and they never pay attention to this stuff, don't get discouraged. Don't get mad at them. Don't get into a debate with them and fight with them. Just once every few months, let them know what you're doing. Hey, I just bought a new car. Cool. Guess how I bought that car? With my banking system. Guess why I did that? Because I'm going to be able to recoup almost every single dollar. I don't know if Chris is telling you this. Chris just bought a new Porsche. He's creating a case study right now, how he's going to recoup the majority of that money from that Porsche, buying it with his policy. And what is he doing? How is he doing it? He's just mimicking exactly what the bank would have done to give him a loan for that Porsche. He's just borrowing it from his policy instead. So when he comes out with that video, pay close attention to what that looks like, because it's really, 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 really cool how this stuff works in the real world. So when you share this with people, don't tell them, don't argue with them. Just let them know every now and then. Hey, guess what? I started this banking system. I think you should check it out too. A year and a half later, when all your debt is gone, hey, remember that banking system I was telling you about? Yeah? Well, guess what? I just used it to finish paying off all my debt. I'm completely debt-free now with credit card debt. How cool is that? And just leave it at that. Guess what will happen? They'll eventually say, hey, you know what? I remember you shared that with me. Like, so you're still doing that? Really? Like, that wasn't a scam? That wasn't like some kind of crap you bought into again? No, that was real, right? I mean, how many of, and here's the cool thing, infinite banking, a lot of people on the surface, they're like, because it's got the cool catchy names, IBC and infinite banking concept and becoming your own banker. And when people learn about it and they start implementing it in their own lives, they get so excited about it. And so it reminds me a lot of like an MLM, of like a network marketing company or situation where somebody's like, how many of you have either been in an MLM or had people come up to you trying to like pitch you on an MLM, right? They're so excited about it. Like, I'm in on the ground floor of this incredible opportunity. And so I think just because of the excitement level, and IBC literally has nothing to do with MLM. Like, you got like nothing. It's, and so this isn't a business. Like, we never actively recruit agents. We never encourage people to become agents because there's not a lot of money in this, honestly. When we design these policies, we design them in the way that you as the buyer, you as the policy owner, have all the benefits and to be able from day one. And for us to be able to do that, guess what? We give up all of our commissions. We give up 60 to 90% of the commission we would typically make on one of these policies to design it the right way. So you have all the benefits. And so because of that, people sometimes equate the excitement and just how cool this stuff is to something like an MLM. And so when you start telling other people about it, for some reason, I feel like it's just one of those things. And again, I use MLM as an example because it is a very polarizing industry. I saw Linus over here said MLMs turn me off. I saw Dexter say I love MLMs. I personally love MLMs too, just because if somebody is looking to start a business and learn the basics of business, learn the basics of sales, learn the basics of marketing, learn the basics of clients and people and relationships and networking, and really everything that is required to start and run a successful business, no matter what industry it's in. I strongly believe that MLM is one of the best paths forward to be able to accomplish that, to get us started with a business and learn everything for a very, very low startup cost. I mean, most MLMs you can get started with for under $1,000. I mean, all in on it. And you could go out there, and a lot of them provide pretty good training. If you find somebody in your upline or whatever they call it, that's the leader, a lot of them will provide really good mentorship and leadership to you. And I've seen people with zero business experience start in MLMs, and they really excel, and they take what they learn and they start very successful, quote unquote, real businesses. So I do think it's really amazing. I agree with you on that, Dexter, but it has nothing to do with infinite banking concept, right? I just think that's a funny example. And so when we start, sharing this with other people, we're just excited about it. But that's a lot of times why I think sometimes you get some of that pushback, and people just don't believe. And then just the fact that they're just, let's admit it's 2024 and the internet exists these days. So you have all the Nigerian princes that are offering millions of dollars, and you have, it seems like every other ad on Facebook is like some kind of scam or fake thing. So there's a lot of crap out there, a lot of noise that you got to cut through. And sometimes I feel like IBC and becoming your own bank gets lumped into some of that just because there's so much noise and stuff going on out there. But here's what's cool is I've been doing this now for over 4 years. I started doing this in 2019 with Chris. Like I said, I've helped well over thousands of clients now start their own banking policies. In that time, over the last 4 or 5 years, I think I've now had two. I think the third one decided to keep theirs. I had 2 clients come to me, and the situations really had nothing to do with the infinite banking concept. They were like leaving, one was leaving, but 2 people that came back and they wanted to stop the policies that they started. So over thousands of clients I've now personally worked with and helped start, I've now had 2. And both of those situations, we were actually able to help them move on from those policies, where it actually still was very beneficial for them in the long run. So really cool. So what that tells me is that people are listening to what we teach. They're implementing it and starting. They're following what we're telling them to do, and they're very happy with it. That's what that tells me, which is really, really, really cool. I've been in sales. I've ran multiple businesses. I've done a lot of investing over the last 15 years. And I can tell you, I've never done anything where people are more excited, happy, and successful with something that I do now with the infinite banking concept and what we do with these policies and what the money multiplier provides in education resources and mentorship and holding the hands of our clients. So just really, really cool to see that. And I know if I go down through and brought people on that have been with us for a couple of years, I could get a lot of people saying the exact same thing with me right now. Now, with that being said, let's get into some of these examples. Now, are there any questions I need to hit? I know, Brad, you said, is there a disclaimer? Yeah, I mean, it's a good question about a disclaimer. Everything we talk about, these are financial strategies. These are, personal experiences that we've had. And so, I'm not, this isn't financial advice. I'm not recommending to invest in anything specific, anything like that. We're just talking about the infinite banking concept and the strategy of how it works. So we'll go through some different examples of that. But yeah, Brad, thanks for asking that. And just for the record, guys, coming out of college, I didn't really know what I wanted to be in life. I feel like a lot of college kids in college, it's finance, business classes, economic classes. I took a broad range of classes, really. I've always thought business was interesting, but never really knew what I wanted to be. When I got out of college, I actually started selling cars. So I moved, I went to college in Virginia, a school called Radford University. And when I was done, I moved down to Cape Coral, Florida. And this was in 2005. So when I moved, and I didn't really know what I was going to do. So I started to, I worked for a Lincoln Mercury dealership, and I knew the car business. My dad, when I was in high school and college, he owned a little used car dealership, one of those buy here, pay here dealerships. And so I understood the car business a little bit. I spent time with him going to auctions, bidding on cars. I did a lot of the detailing. So once we would buy vehicles, I'd go through them and clean them up and get them ready to sell, and move him around a lot, things like that, and help him. Never really got too involved in the business at that younger age. But I was around the car business, so I understood it a little bit. And so when I moved down to Cape Coral, I got a job in Fort Myers for Scanlon Lincoln Mercury. We sold Lincoln Town Cars and Mercury Grand Marquis. And back then they still have the Navigators and the Aviators. And anyways, so I was working at the dealership, and in the car dealership, if you've ever been in that industry, there's a lot of downtime, kind of sitting around BSing and stuff. And one of the guys I worked with had just retired from American Express Financial Advisors. And American Express at the time was going through a transition. They had just been bought out by and were rebranding themselves as Ameriprise Financial Group. And so he had just retired from American Express Financial Advisors. So we were sitting around chatting, and he's like, Stephen, we've talked many times, and, I feel like you're a pretty smart, young man. And, I was in my early 20s, and he's like, what are you going to do with your life? Like, I doubt you want to like be in the car business for the rest of your life. And I was like, yeah, definitely not. Like, I just don't really know what I want to be though. I haven't really had anything that's like been like, man, this is what you got to do with your life. And I always had an idea, but I never really knew exactly what I wanted to do. And so he was like, you know what? He's like, I just retired as a financial planner for the last 30 years. He goes, I think you're pretty good with people. It seems like you're a pretty smart guy. He's like, you might enjoy it. He's like, would you be interested if I could get you an interview? And I said, yeah, sure. Why not? It never hurts to have an interview and talk to someone new. And so he gave me, he got me an interview. I went into Ameriprise Financial, met with the bosses in the office in Fort Myers, Florida. And I don't know if you know how financial planning firms work, but when you're a financial advisor, you're required to have all the licenses. So a Series 7, a Series 66, variable life and annuity license. But the Series 7 and the 66, the Securities and Exchange Commission will not allow anybody to go take that exam. You have to have a financial firm sponsor you first. So basically, you have to have a financial firm or brokerage agree to hire you and sponsor you for you to be able to go out there and take those exams to get licensed to actually be able to work for that firm. Okay. So it's kind of interesting how that works. So they said, okay, we'll sponsor you to go and get these licenses. So I bought the books from Kaplan Financial, and I started studying for my Series 7 and my 66. Long story short, I passed both exams with flying colors, and I started working as a personal financial advisor with Ameriprise Financial right when they went through the conversion of their rebranding. And I did it for a couple of years. And just a quick funny backstory on that. About a year into my career working with Ameriprise Financial, I was meeting with the two bosses of the branch office, and they said, Stephen, what's funny is we actually had a bet going on you. They said one of them believed that I was going to be able to pass my exams and get licensed and become a successful advisor. And the other one bet against me and actually said they didn't think I was going to be able to do it. And so they always had a friendly bet they finally told me about. And so, but we ended up having a great relationship, obviously, and everything else. But anyways, so during my life at Ameriprise Financial, I was really able to understand the traditional side of the way money works for most people in this country. And it allowed me to really understand the mindset of it. What does financial planning mean for most people? What is the traditional path to financial success like for most people? How do mutual funds work? How does the stock market work? How do retirement accounts work? How do annuities work? How does regular life insurance work? And all the rest of it. So, I really got a really strong education. So I would never trade that experience for anything. But it also taught me what I realized I don't want to do with the rest of my life. And financial advisors, I give them all the credit in the world. They're amazing people and they help a lot of people. And that's what I really learned that I loved about it was being able to help other people, being able to work with people in their situations. I come from a crazy childhood family and stuff like that. And so being able to work with families and being able to provide a better path for them forward and really help them find a way to be successful was huge for me. I loved it. You know, the number one cause, do you guys know what the number one cause of divorce in this country is? Well, the number one cause of divorce in this country, first off, is marriage. So if you're not married, maybe rethink that. But I'm just kidding, guys. So the number one cause of divorce in this country is money. And so it's just amazing to me. Like, we live in the richest country in the world, more opportunity than anywhere else in the world. And guess what? People still argue, fight, and get divorced, destroy their families over money. You know, and you hear us talk about this all the time. You look at the statistics, only 95% of people in this country, according to the Social Security Administration, are not able to retire when they want to because of money issues. And so all these things that I saw, and so I learned, you know, at a young age, hey, I love being able to work with people, hear their situations, and help them create a plan to not have to stress about money. And B, I also learned at a young age that traditional financial strategies tend to just not work. There's too many ups and downs in the stock market. There's too much risk involved. There's too many fees and everything else that goes on with traditional investing and traditional financial strategies that benefit the banks, the brokerages, benefit everybody else, and not as much the everyday person, the 95%. And I was able to learn that. So when I was introduced to real estate investing by attending a free seminar, I went to a free seminar and sat there and watched a speaker with my cousin, Brent, who you hear me talk about every now and then. Brent and I, to this day, still have business together. We invest together, work together all the time on different projects. But he and I attended that together. What was that? Almost 20 years ago at this point. And I sat there and I watched this guy at the front of the room talk about entrepreneurship and business ownership and investing in real estate. And it started to click with me because I was comparing it to what I was doing as a financial advisor. And I was like, you know what? This guy up here as a real estate investor, as an entrepreneur, he's controlling his life. Those of you that know me, do you think that I like being told what to do? Do you think that I play well in a world where I would have a boss? What do you guys think? If you guys don't know me, you'll probably see this, but no, yeah, Dexter. I've always kind of been the person that I love working with others, debating. I love conversations. I love strategizing. I don't love being told what to do. And so, you know, as an investor, as a business owner, as an entrepreneur, that's what a lot of that is being able to control your own destiny. And so when we talk about the infinite banking concept, a lot of it has to do with control. And so it goes right along. And I think that's why so many of our clients are also entrepreneurs and are also real estate investors, because they like that control aspect. Now, can this work for just the everyday person that likes having a boss, likes going to work, has a great career? 1,000,000%. But that person that has that lifestyle, again, IBC, it's a mindset shift. So it's hard for them to change the mindset of what they've always done to shift the way that where they move their money and how they control that money. It's just hard for them mentally to get past that. But can someone like that be very, very successful with the infinite banking concept? 1,000,000%. Because they're stable. Because a lot of times, especially if you have a good career, you have nice income, you have money coming in. Now, you might be bleeding it all out to taxes, bleeding it all out to inflation, to financing purchases, to the banks with these interest rates and everything else. I mean, I'll show you an example of a chiropractor making hundreds of thousands of dollars a year, but still found himself in almost $500,000 of third-party debt. Why? Because that's that consumer mindset. And that's what happens with so many people. More money, more problems. It's so true, right? The more money we make, the more money we spend, and it ends up, the more access to money we have traditionally. You know, if you're making great money, what do the banks do? Oh, let me give you a loan. Oh, let us lend you money. Oh, we're doing a 0% introductory credit card offer. The more money you make, the more access to money you have in a lot of cases too. And guess what happens? We all want to keep up with the Joneses. We all want something new. That's just human nature. And I got no problem with it. I love buying new things as much as anybody else. I love traveling and doing things like that. And guess what? Probably more so than a lot of people. I will admit, my net worth would probably be a lot more had I learned about the infinite banking concept 15 years ago and started funding my lifestyle with my own banking system as opposed to doing what everybody else I knew was doing, which was all that traditional stuff I just talked about. Sure, it made me look like I was doing great, but at the end of the day, a lot of it was leverage, a lot of it was finance. And was I continuing to grow financially? Absolutely. But could I have grown faster and a lot more had I done things more smartly? Back then, 100%. But as Shauna says all the time, when's the best time to plant a tree? Yesterday. When's the best time to plant a tree? Today. And we can't go back in time. The time machine, as far as I know, has not been created yet. So all we can do is say, okay, where are we today? And how can we be as smart as possible to take advantage of what we have today? And that's exactly the decision I made when I learned about this in 2019 and started my own policies in 2020, started my own banking system in 2020. Do I wish I would have done this in 2005? 100%. Can I go back? No. So all I can do is continue to grow and build where I am today. And that's what I want every single one of you to think about, that are on here right now when you're thinking about growing and starting your own banking system. And it doesn't start with one policy. What do we do from there? We start adding additional. We grow a family banking system. We start seeing how much, because why? Because like a lot of things in life, I mean, have you ever done something that you had to study for, but you really couldn't know how to really do it until you actually got in there and did it? Like airplane pilots, for example. You're going to take ground school. You're going to learn how the airplane flies and how aerodynamics work and what the pedals do and the controls do and the throttle does and the ailerons and the rudders and everything else on an airplane. You're going to learn and you're going to study all of that, because if you were just to jump in an airplane without that and take off, would that be smart? No. You're going to study as much as you can. But guess what? You can study all in the world, but until you actually get in that airplane and take off, does any of it matter? No. You're not going to really know what it's like until you're in that thing and you're feeling it and you're experiencing it. And that's why when you learn to fly an airplane, you have a co-pilot with you. You have a trainer with you that's there making sure that everything you read in a book and watched on videos, you're able to actually implement in real life. And that's very similar to the infinite banking concept. You can read all the books, Becoming Your Own Banker, Mapping Out the Millionaire Mystery. Here's the other one, How Privatized Banking Really Works. And this is with Carlos Lara and Robert Murphy, which, by the way, our next 3-day Money School Essentials, we got Robert Murphy coming on the 3-day training to do a presentation for us. So super excited. Make sure you buy a ticket for the next 3-day, because we're adding speakers right now that have never been on our past 3 days. And those of you that have been on our 3 days in the past, it's got to be the best financial 3-day educational virtual training out there, right? It's got to be. I haven't seen a better one yet. But anyways, so we got Robert Murphy of How Privatized Banking Really Works coming on our next 3 days. So super pumped about that. But nonetheless, you can read all the books. You can watch all of the videos, which, by the way, how many videos does Chris now have on YouTube? Shauna, how many views? He just eclipsed a certain amount of views, right? It was like 3 million views or something. You can read all the books. You can watch all the videos. But until you actually start your own policy, put your own dollars into it, take your first loan and watch it happen in real life, it's all conceptual. But once you actually implement and experience it in your own life, what's going to happen from there? You're going to want to do more of it. And that's why over 90% of our clients that start their first policy start additional policies. Because once you experience, you'll never be able to go back. That mindset shift that occurs, that mindset shift, this is us today. This is us after we learn financial banking. You'll never go back. You can't go back. It's like riding a bike. When you learn how to ride a bike, you can quit riding a bike for 20 years. You get back on a bike, you know how to do it. Exact same thing. I didn't snowboard for 10 years. I loved snowboarding growing up. I took 10 years off because of family, other commitments. I just didn't want to take the time to myself to go do it. Well, guess what? I jumped back on a snowboard 10 years later, going down black mountains. it's some things in life. That's what's going to happen. Once you understand these financial strategies, you'll never want to go back. All right, let's keep rolling with this. So with all that being said, let me show a couple examples here. And by the way, here's some of those books I mentioned, just so if you guys want to write a couple more down. Does anybody have any questions to this point? So Kevin Johnson asks, is it possible to buy someone else's IBC policy if I am uninsurable? Yes, absolutely it is. Kevin, it definitely is. So just give us a shout and we can give you some ideas for doing that. Let's see here. Just reading the chat real quick. RB, document a heart problem, possibly. It depends. Just connect with us. And if not, we can look at using maybe somebody else where you can still own the policy. It's on somebody else's life. To Kevin's point, maybe you can purchase someone else's. So we do have some options, just depends on specifically what those heart issues could be. And we could do what's called a preliminary underwriting, where we kind of just send your situation to the underwriters and they could tell us, yeah, it's worth attempting to do full underwriting or not. So definitely just get with us to know. Yeah, and by the way, if anybody has to hop off early right now or anything like that, Shauna just put the link in the calendar. So if anybody does want to start a policy, start a second policy, just want to talk about your situation, like what this could look like for you. No pressure, no commitment, anything like that. There's no cost. You guys can schedule a call with one of our money mentors. So what we've done, Chris and I have taken a handful of individuals that we feel are the right people that are fully licensed in all 50 states to help all of our clients. They've been doing infinite banking in their own lives for many years, and they have the commitment to be able to teach our clients and work with you to solve your money problem. So whether it's debt, whether it's purchases, whether it's a business, whether it's building wealth, investing, real estate, all of our money mentors are trained to be able to speak with you and work with you to figure that out and to plan and create a strategy for you. So I would like to invite all of you on right now, if you'd like, to schedule a call with one of my money mentors that Chris and I have personally worked with and trained and are on our internal team and that we work with on a daily basis. So our money mentors I talk to every single day of our lives. And so these money mentors are going to be the ones spending quite a bit of time with you setting this up properly. And what that looks like, just so you know, we are going to, when you schedule this on the calendar, you can either do it on the phone, or what I would recommend is doing a Zoom call. So we're setting up where all of our money mentors on the initial strategy call are able to do a Zoom. So that way you guys can talk almost like it's in person. You know, you can get to know them a little bit better. So we're going to spend 60 minutes with you on the first call, really getting to know you, finding out what questions you have, what your financial situation looks like, what are your goals, what are your problems, and what's your family look like, and what are you trying to accomplish? And then that's going to allow the money mentor to start working with you on, okay, well, what is the right amount of money to put into one of these policies to pay the premiums in, what we call the deposits, okay? Deposit into your banking system. What do these premiums look like? Can you put extra money in it up front to jumpstart it, what we call a dump in? You know, hey, I got money over here, I got money over there, I got access to this money here. You know, should I take some of that and dump that into the policy up front to jumpstart it, pull most of it right back out to use for this investment or for this opportunity or for, you know, whatever that case is. Okay, does it make sense to do that or not? You know, should I be paying into this thing monthly? Should I be paying into this thing annually, quarterly? You know, what does that look like and what are my options? How much, you know, today, how much next year, how much the following year. So we'll talk to you about all of that and what that looks like for your situation. And then once we have that, what we'll do is we will design your policy and we will create, using one of our proprietary infinite banking tools, we'll prepare a report for you that shows you exactly how you're going to use this banking policy for the exact situation that you came to us for. Whatever that money problem or whatever that goal is, we will show you using the exact policy, exactly what that looks like ahead of time before you even start the thing. So it's really neat. So our money mentors are going to work with you to figure that out and then create that plan to give to you. And then, of course, because this is, I guess we haven't really talked about what this is, which I'll let you know right now. It's a whole life insurance policy. I'll get to that in a second. I know we've been talking about policies a little bit, but for anybody that's new on here, here's the rest of those books real quick, the ones I would recommend. So everybody that's on right now, you should have received digital versions of Mapping Out the Millionaire Mystery, the Private Money Guide Real Estate Edition, and the third book you got was this one right here in my screen, Drifting Away from Traditional Car Buying. So we give you those 3 books just for being on this webinar today, free of charge, the digital versions. If you didn't receive those, just shoot me an email and I'll get you over those via email. All right. And the more you can learn, I mean, Robert Kiyosaki, who was one of my mentors when I was starting and investing in entrepreneurship, and then I had the opportunity to actually work with Robert directly for many years. I just think Kiyosaki's a genius the way he teaches this stuff. So I recommend anything, by Robert Kiyosaki. If you guys could see my bookshelf across from me right here, I probably have 20 different Robert Kiyosaki books and trainings and manuals. I got all his series and everything. Just think he's a genius. Anything by Tony Robbins, I mean, just an absolute legend in this industry. But Tony and Robert both talk all about the infinite banking concept in these 2 books right here. So Money Master the Game and The Second Chance by Kiyosaki, they talk all about this concept in those books. So it's just kind of cool to hear it from other people, what they say about infinite banking and what their opinions are. All right. And so when we talk about infinite banking and this machine, like I just said, this is a dividend paying whole life insurance policy from a mutually owned insurance company. And so I get this question a lot, and I just want to talk about it real fast. So, why whole life insurance and not something else? And then why a mutually owned insurance company? And then what insurance company? Like there's lots of insurance companies out there. So why the ones that we use and what does that look like? And so first off, when it comes to what we're doing here with the infinite banking concept, and I alluded to this earlier, but let's just hit it one more time. So what are we trying to accomplish? Number one, we want to have a place where when we make money, that money is not just sitting. We want that money to grow for us primarily because of inflation. Inflation is always increasing. The goal of the Federal Reserve is 2% a year. Okay. So the goal of our central banking system that controls the United States of America and money across the entire world, the central banking system in this country, it's known as the Federal Reserve System. Their goal is to make sure that you lose 2% a year on the money you make, because that's all inflation is. Inflation means what the dollar purchased today will purchase less in the future because of inflation. So at 2%, if I could buy a bottle of water today for $1, what that means is next year, that same bottle of water is going to cost me $1.02. So what I buy today, I can buy less of next year. Or what I buy today, it takes more dollars to buy the exact same thing next year. Now, that's a 2% goal. Where are we at right now? Well, I think year over year from last year, we're in the low 3s, 3.1, 3.3%, I believe we're at right now. If we look at since 2020, since January of 2020, so about 4.5 years, inflation is at about a little over 25%. So just in the last 4.5 years, we've lost 25% of what the purchasing power of the dollar was just 4.5 years ago. So what that means for us, when we make $1, we need that dollar to also grow. And the goal would be for that to grow at least at the pace of inflation. So at least we're not losing. Okay. Does that make sense for everybody? Now there's multiple ways we can do that. We can take that dollar and we can invest. We can take that dollar and things like that. But what if we could take that dollar, put it somewhere that's growing for us? It's guaranteed. There's no risk involved because of that. And simultaneously, we can then take that dollar and use it for other things also. Okay. So that's what whole life insurance allows us to do. Now, whole life insurance itself is very boring. And what I mean by boring, it's very simple. There's not a lot to it. Now, if we want our money to be warehoused somewhere where it's safe and protected, and really we just want it to be able to grow, do we want that money to be in something that's boring and simple? Absolutely. Boring and simple is consistent and predictable. And when we warehouse our wealth, when this is our foundation, are you okay with that? Absolutely, right? So a lot of people are like, well, why not use an IUL for infinite banking? Well, IULs have a lot of risk. They're tied to indexes. They're indexed to universal life. And so the growth of an IUL is based on how the economy and the stock market is performing. The growth of a whole life insurance policy is based on how the mutually owned insurance company is doing financially. So we'll talk about that in a second when I get to why the companies that we use. So the whole life policy grows through annual company dividends. Dividends are basically profits that the insurance company pays out to insurance company owners who are the policy holders. That's what a mutually owned insurance company means. When you buy a policy, you're buying into the company. It's a mutually owned insurance, mutually owned with the policy holders. So those dividends that you're getting paid out are directly a reflection of how that insurance company is doing financially. So we want to look at history when it comes to that. So I'll get to that in a second. Now, when we warehouse our money, not only do we want it to grow to keep up with inflation, but what else do we want to eliminate from our lives? What else? Where else do we lose money financially? Well, we lose money through taxes. Taxes is what I would call one of the three wealth killers. And we'll talk a lot about the wealth killers on that 3-day training also. So make sure you join us for the 3-day. But one of the top 3 wealth killers is taxes. We bleed out something like over almost 60% of the money we make. At some point, we lose to taxes, whether it's income taxes or taxes on things, on sales taxes, things we buy, asset taxes, like paid taxes on vehicles. You know, I just saw somebody, they were talking about when they bought a boat in Florida 5 years ago, they paid sales tax on that boat. Well, they just moved to Washington State and they went to re-register the boat in Washington State. And Washington State wants to charge them sales tax again at a value that's higher than what they actually bought the boat for the first time in Florida. And so they were taxed then, they were taxed again on the exact same thing. So now we're like being double taxed, which is even crazier, a whole different situation. But anyways, we have income tax, we have sales taxes, we have real estate taxes, we have property taxes, we have all these taxes and all these taxes that we pay. So it's something like 50, 60% on average or something. So anyways, we want to start eliminating these taxes. So one of the cool things about a whole life insurance policy is all the money that goes into this thing, all the growth through those annual dividends, it grows tax-free. Beautiful thing. So we're keeping up with inflation. We're eliminating taxes on that foundation of our money. It's guaranteed to grow because in that whole life insurance contract, yes, it says that the policy is going to compound and grow through the company's annual dividends. But what happens if the company doesn't make money one year? Well, in the contract, it says that the insurance carrier is required to pay you a minimum amount in that policy, even if the company has no dividends to pay out. So that minimum is going to range anywhere from typically 2% to 3.25%, depending on the company that we use. Now, good news, is that keeping up with inflation? 9 times out of 10 in the years? Absolutely it is, if not outperforming it. So even at the bare worst case scenario, we're still growing within that thing tax-free, which remember, tax-free means it's more at a high rate higher. And keep in mind, I keep saying one key word here. What's the one key word I keep saying over and over and over again? When that money's growing, who's going to say it in the chat box? What's the one key word I keep saying? That money's growing inside the policy. How's it growing? Tax-free? Guaranteed? What else? There it is. Tested it. Compounding. Absolutely. So those company dividends that they're paying you, not only are you receiving that each year, but that money in that policy, it's compounding each year. So do you guys understand compounding interest? Compounding, well, actually, I got a good example. I'll share an example of compounding interest in 1 second that really highlights how compounding interest works. All right. So just keep that in mind. Tax-free, guaranteed, and compounding, which means, yeah, you're getting, let's say, company dividends, let's just say 5% this year, 5.5% this year. But if I started that policy 10 years ago, what does that 5.5% really look like as growth in my policy? Could be 10%, could be 20%, could be 60%. That compounding growth really starts to vamp up. The great example of compounding interest, if I was to give you $1 million cash today, or I was going to give you 1 penny today, but for the next 30 days, that penny is going to multiply and double itself for the next 30 days. And at the end of 30 days, you're going to have that sum of money. What would you rather have? $1 million today or the penny that doubles itself for the next 30 days and that sum? Well, you better take the penny today, because in one short month from now, it's going to be worth over $4 million. So you make a lot more money taking that penny, and that's compounding interest. That's how that works. Compounds over and over and over. All right, so that's exactly how these policies work. And so that's why we use whole life. The fees on them are very, 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 very low. And all that means is the cost of insurance. That cost of insurance stays level for the rest of your life. So whatever that cost of insurance is today, for when I'm 41 years old, if I start a new policy today, my cost of insurance will be exactly the same as when I'm in 40 years from now, when I'm 81 years old. In IULs, in most scenarios, that cost of insurance increases each year. It gets more and more expensive. And so there's all these different reasons we use this whole life policy. It's safe, it's conservative, it's the foundation for our money. It provides us everything we need to do with it. And then why life insurance in general? Because we now can use that money simultaneously. And so all this money we're putting into this policy, we can do what's called a policy loan. And this is how we start using it to pay off debt. This is how we start using it to make purchases like vehicles, major purchases. This is how we start using it to grow our wealth through real estate investing, through business, all these different ways to use these. We get the money in there, we take advantage of everything I just talked about, then we take what's called a policy loan to use that money for other things, okay? And even when we use that money, guess what happens? It's a policy loan. So if I have $100,000 in my policy and I take $100,000 out to go buy a piece of real estate, guess what? That full $100,000 remains in there doing what? Compounding, uninterrupted, guaranteed for the rest of my life, even while I'm simultaneously. So I can use that $100,000 all year. I can take it out the beginning of the year, use that money the entire year, never put any of it back into my policy. And guess what? The next year, my policy is going to be worth 5, 10, 15, 20, 30, 80% more than it was the year before. Even though I had all the money out of it all year, using it, making 20, 15, 20% over here in a real estate deal, it's still compounding and growing for me over here. So now what I'm doing, what am I doing? I'm using the same dollar I put into that policy to start with. I'm using the same exact dollar, but now instead of just using that dollar to make 15, 20% of my real estate deal, I'm making 15, 20% of my real estate, plus I'm making whatever that compounding is over here within my policy tax-free. Makes sense, right? Just being smarter with that same dollar. We're not letting it bleed out to inflation. We're not letting it bleed out to taxes. We're not letting it have one use. We're using it multiple times. That's it. So that's why whole life insurance. That's why dividend paying whole life insurance. And that's why with a mutually owned insurance company. Now, which companies do we use? Well, there's a few things that go into that as well. We've been doing this now for well over a decade. We've learned from people that have been doing it much longer than we have been doing it. And so we've had some experience working with different insurance carriers, how they operate, what they allow us to do. So when we design one of these whole life insurance policies, this is not a off-the-shelf whole life insurance policy. You can't just call an insurance company and say, hey, I want a banking policy. They're going to have no idea how to design it properly. They're not going to teach you how to use it and all the rest of it. And so we're very good at designing these. And so that's why I said on that first call with the Money Mentor, the most important part of all of this is to share with us what you're trying to accomplish. Let us help you build a strategy, because the more the Money Mentor can get into your head as our client, the more we can create the properly designed policy for you. Okay. And so when we design this thing, how much goes into it? How much access to cash value immediately do you have? What's it look like 5 years from now, 10 years from now, 15 years from now? How much is going into it throughout those years? What does that look like? So it allows us to get in your head and create the perfect plan and policy design for you. So every single policy we design is different for every one of our clients. Every one of them is customized for you. And so when we work with an insurance company, we need these insurance carriers, these insurance companies to allow us to be able to design and build these things the right way. Now, luckily, we've been able to find some of the top mutually owned insurance companies in the nation, in the United States of America, that allow us to to design policies this way. And they love the concept of infinite banking. Because if we're going to work with a company to do this for the rest of our lives, we want to work with companies that want to work with us, right? This is where our wealth is warehoused. This is where we're putting all of our money. So we are putting our money there. We hope that you guys see, hey, we can put our money there too, right? So that's exactly why we work with these companies. And so we want these companies to be as safe as possible. The highest insurance rating, A++, been around 130, 140, 150 plus years of consistent dividends every single year. The companies we work have never not paid out these strong, consistent dividends every single year for their inception, through the Great Recession, through wars, through 2008 Great Recession, through all these different financial turmoil in the country. These insurance companies have stayed strong and paid out consistent dividends for 130, 140, almost 150 years. So that's why we use the companies that we use. And again, we've done it through experience, through studying this for many, 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 many years. All right. Any questions on any of that stuff? Because that is an important factor that I think does get overlooked sometimes. I'll say it one more time. So just to be clear here also, we aren't selling anything. So the link that we put over there to schedule a call with a money mentor, there's no cost to do that. That hour-long phone call, talking your strategy. At the end of the call, you can say, you know what? Thank you so much for the information. You've really given me a lot of valuable information, and this was time well spent. I just don't think it's right for me right now. Or, maybe this is something I want to do in 6 months from now. Just, I'm not ready right now. Whatever the case is. Awesome. Thank you for spending the hour with us. We love you. Like, it's no problem. Let's say you decide, hey, at the end of that call, hey, this makes sense. Let's go ahead and start a policy. Let's move forward with getting qualified for it, which there is a qualification. There's full medical underwriting and everything else. So it does take a little time to actually get this thing in force and started. But that's the next step after that hour-long call. If you're comfortable, let's design the policy. Let's start that medical underwriting with you to make sure you can qualify. But guess what? No cost. You're not paying us anything for any of that. Once the policy, you're qualified, you're ready to start it, you're ready to fund it, you put the money into it, you sign on the dotted line. Now you own this policy. It's yours. You are a mutually owner of a policy at a mutually owned insurance company. You put your first dollar in. Within 30 days, you take your first loan out. You follow the plan that we created for you. We follow the strategy. You start paying off debt. You use it to buy a car. You use it to invest. We meet with you right afterwards to help you with all that. We meet with you 3 months later to revise the plan. We meet with you a couple months later to make sure everything's on track. We meet with you 30 days later because you had a question. We meet with you 6 months later because you wanted to update and change something on your policy. All of that. You never pay us a dime for any of it. Okay. We never charge for any of that stuff. You never give us a dollar for any of that. Okay. So I just wanted to make that very, very clear. We get paid. We are licensed insurance agents. The insurance companies, just like any other insurance agent in the world, they get paid a commission from the insurance company. So before I mentioned, hey, you could call the insurance and it's all built in. Like, you never will see any of this on your side. You could call the insurance company directly, work with one of their representatives in their home office. Let's just say somehow you got somebody that knew how to build one of these infinite banking policies, and for some reason they wanted to help you do it and help you for years to come and help you with everything else. That literally would never happen. Let's just pretend. Well, guess what? Even working directly with the home office at the insurance carrier, it's the exact same policy. They don't have like policies you can buy from them and policies you buy with an agent that's making a commission. It's all the same. So you never, ever, ever literally will pay us a dime in any way, okay? The insurance companies have all that built in. So they are the ones who pay us what we get paid. Now, again, We only get paid 98% of what we make. 97, 98% of the commission we make is only on what's called the base premium, which is only typically 20 to 40%. On most of the policies, we do 20 to 40% of the total premium. So let's say you're doing $10,000 a year, just using round numbers here. We're really only making 97% of the commission off of that 25% of that 10,000 premium, where a typical whole life policy, what is that agent making? 100%, not 25, 100%. They're making a lot more. Or in an IUL, they're making 150, 180% of that. Like IULs, those guys make all kinds of commissions. We're making a much reduced commission. But again, why are we doing that? Because we design these to give you all the benefits to these policies immediately from day one. You're not waiting a year or two to start using this. You're dumping money in. You're immediately within 30 days pulling money back out of there to use to follow the strategy and plan that we build you on that strategy call. Fair enough? All right, cool. Any questions on that? All right, perfect. Now, I mentioned before, I just want to talk a little bit real quick about like simple versus compounding interest, because that is a large portion of how this works. And so when we start talking about, the infinite banking concept and becoming your own bank and controlling your money, well, if we're going to be our own bank, would it make sense to just kind of mimic what banks do, right? Why recreate the wheel? If we know how banks make money and how banks operate, why don't we just mimic what they do with our banking system? And anytime we would ever use a bank, instead of going to that bank and doing what they would do with us, let's just go to our own banking system and do the exact same thing. And that's at the essence what we're doing here. So if I want to buy a car and I go to the bank, let me give you an example of what that would look like. So I walk into a bank and I tell that bank, hey, I would like to buy a car. I've been banking with you guys for years. I have a savings account, a checking account, whatever with you guys. And you say, you walk into that bank and you go, hey, I'd like to buy a car for, I don't know, $25,000. And you say, and you know what, I've been banking with you guys and I've saved up $25,000 in my savings account. So I'd like to go ahead and withdraw that $25,000 to go buy a car with it. And what's going to happen? Well, number one, the bank teller is going to say, okay, hold on a second, I'll be right back. And then somebody else is going to come on over and they'll probably have like a suit on with a little name tag that says vice president, because they're all vice presidents in a bank. And, we talk about that all the time. That's why banks buy so much life insurance. Did you guys know banks are the #1 purchasers of whole life insurance in the country? Banks. It's known as BOLI, BOLI, bank-owned life insurance. Write that down if you're still taking notes. And go look that up later. BOLI, bank-owned life insurance. Banks are the largest purchaser of life insurance. That's why they're all vice presidents at the bank, because by being a vice president, the bank now has a insurable interest on that individual and can buy a policy on their life. Whole different conversation. Companies do it all the time with COLI as well, company-owned life insurance. But that's why they do it nonetheless, okay? Again, if banks are doing it, why don't we do it? So we go to that bank, the teller comes over to, or the manager comes over to you. Hi, I understand you want to take out $25,000. First off, does a bank have $25,000 sitting in a vault waiting for you? Typically not. Typically, banks don't keep that kind of actual cash at the bank, right? But nonetheless, the teller's going to come over, pretend that's not even right. So he says, okay, I understand you want to buy a car. They're going to say, listen, let me explain something. Let me make an offer to you. What I can do is, I understand you have $25,000 in your savings account and you want to pull that money out. However, what if instead of that, what if I give you the $25,000 to go buy the car and we allow the money in the savings account to stay in there? So that way you don't have to withdraw the money. Your money can stay in the savings account. And you know what else we're going to do? We're going to give you 4% in this savings account for the next 5 years. Now, I don't think any banks are actually going to offer you that right now, but let's just pretend that they do this. They say, so what we're going to do is we're going to allow you to leave your $25,000 in the savings account. It's going to grow over the next 5 years at 4% annually. And all we're going to do is we're going to use that savings account as collateral to give you a loan for $25,000 to go buy that car. So that way, your money's continuing to grow for you in the savings account, and you can still go buy your car. And you say, that sounds pretty cool. Okay, what am I missing here? Well, here's a question. What are you going to charge me for that loan? You said you're going to pay me 4% of my savings account, give me a loan as collateral against savings account to go buy the car. Well, what are you charging me for the loan? And the banker goes, okay, we're going to charge you 6% for the car loan. And you immediately think to yourself, you're like, no. I know you got a bowl of lollipops sitting there that are known as dum-dums, bowl of suckers. You think we're all dum-dums and suckers for coming in here, right? But I'm no dummy. Might not be the smartest guy in the world, but I'm no dummy. I'm not going to give you 6% and you give me 4%. Just give me my $25,000. And the banker says, no, hold on. Let me explain the difference. Because what we're doing on this car note that we're giving you, this is a simple interest car note. And what happens with a simple interest loan? Well, let me show you exactly what happens. When we take that $25,000, how do we pay that $25,000 back? We make a monthly interest payment for the next 5 years, typically. Car notes are about 60 months. So let's say that's $483 a month. So for the next 5 years, every month, I'm going to be paying the bank $483 back. Now, what happens each time that I make that $483 payment? Well, the $25,000 balance gets reduced. So each time I make a payment, the principal is reduced. So each year, when I'm paying 6% on this loan, I'm paying actually the interest on a lower principal amount each year that I have that loan. So by the last year, I'm really only paying interest on a much smaller principal amount. So at the end of the 5 years, if you do the math on that, the future value of that $25,000 for the bank is just under $29,000, meaning you pay just under $4,000 in interest. So that 25 would have been grown to 29. But what's going on with our money sitting in our savings account over here at 4%? Okay. What happens at that over the next 60 months? Well, that $25,000 at 4% each year is doing what? It's compounding in growth. So that $25,000 year one is going to be, let's say, $26,000. And then that year, $26,000 is the 4% it's growing on. So now maybe in the third year, it's 27.3. It's a bigger amount. And now that 4% is compounding off the larger amount. So each year, the 4% growth is the same, but the 4% is growing, is compounding on a larger balance. And that's how compounding interest works. Each year, the balance gets higher and higher and higher. Where on the other side with the car note, the principal balance each year gets lower and lower and lower. And so that's at the end of the 5 years, that 4%, that $25,000, the same grows to be just over $30,500. So if we would have listened to the banker and paid 6% while only earning 4%, we actually would have made net over $1,500 in that scenario. So can you make money earning 4% while paying 6%? All day, every day. And at the end of the day, that's exactly how this infinite banking concept is going to work in your life. When you start this policy, every dollar in it compounds and grows for the rest of your life, uninterrupted, guaranteed, tax-free. Simultaneously, we can take these loans out to use it to do things like buy vehicles. So now the money's compounding over here. Now we can give ourselves a simple interest depreciating loan to go buy a vehicle. And then what are we going to do? We're going to pay ourselves back just like we would pay the bank back. This is what we call being an honest banker. Okay. What's the difference though? Who's in charge of this? You are. You're the banker. It's your bank. So if I was to borrow money from BMW and stop making my car payment, what's going to happen? BMW is going to repo that vehicle. They're in charge. If I get a loan from my banking system and something financially happens and I can't pay my car payment back to myself for a while, what's going to happen? Nothing. I'm in complete control. I'm the banker. So it allows me to go out there and do what I need to do financially. I'm in complete control every single time. Now, we always encourage you to be an honest banker, treat your money like you would the bank's money. But at the end of the day, who's in charge? You are. You're the banker. So with all that said, guys, I know we're at the end of the hour and a half here. the end of the 90 minutes. I didn't get to get in and actually show you kind of some of these examples and how they work. I know we just released a brand new, what we call the 90-minute infinite banking video. So what I can do is I can put that over in the chat box. I'd recommend you guys checking it out. Even if you've watched one of our 90-minute trainings in the past, it's really good because Chris redid a lot of stuff and it's really fun. So I would highly recommend checking that out. And then, like I said, schedule a call. So there's a call with one of our money mentors right there. We'll talk to you about your strategy. We'll talk to you about what that looks like. And, but did you guys like this today? Was this pretty good? We have all these different tools we're going to be helping you guys with. We have our desk blasters. We have our gains projectors. We have our major purchase financial calculators. We have all these different things. You start using your money, put it in and flowing it through PMC. I could talk for days and days and days about this stuff, but what I want to do today was kind of, get back to, what is infinite banking? Why are we doing what we're doing and the way that we do it? So I hope this helps some of you guys here today. If anybody needs to contact me, reach out anytime, snagy@themoneymultiplier.com. If you want to schedule a call, here's the link for our money mentors over there. Like I said, I'm happy to give you guys any resources, free books, anything like that we have. Just give me a shout. And cool. With that said, I'll open up Q&A for the last 5 minutes. And we'll wrap this baby up. Appreciate you guys' time. And thank you for coming on today. Let's see. Deborah said, don't you need to be medically sound? So Deborah, there's different health ratings. You don't have to be like a athlete or anything by any means. But let us know what you're going through health-wise, and we can see, whether that would make sense or not. It's like I said, it doesn't cost you anything to explore the option. All right. Thank you, Brent. Thanks, Tess. Thanks, Linus. What are the options if you have turned down for a policy? Judy, we could look at using someone else's life, someone, a spouse, business partner, family member. We could look at purchasing someone else's policy that is looking to sell, things of that nature. The next virtual 3-day is August 9th, 10th, and 11th. August 9th, 10th, and 11th. You guys looking to get on that 3-day? Yeah, I'm just looking at my schedule. So July 25th, 26th, 27th is that mini experience we're doing for Chris's birthday up in Buffalo. I don't know if we have any tickets left for that, but that's going to be a fun one. Then we got the virtual 3-day, August 8th, 9th, and 10th. Oh, no, I'm sorry. The virtual infinite banking 2-day is August 8th or August 9th and 10th. And then August 23rd, 24th, and 25th is the 3-day, next 3-day. All right, cool, guys. Well, I appreciate everybody coming on today again. The new office is awesome, Sam. I've seen photos, but excited to see it myself next month when I head up that way. Guys, have a great week, great day, and we'll be here for Ask Me Anything at 4:30. So join us on the YouTube channel or Facebook. We'll see you guys there. All right, thanks, guys. See you, bye.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.